Yo, yo, yo. Welcome back. Welcome back to another streams. Wow, we somehow have a lot more people joining up after 1 minute of opening the streams. Jesus. What is going on? It is nearly 7:30 today. It's 7:30 p.m. Nowhere near market open. We have so many people on. Yes, welcome. Hope everybody had a good weekend, or still is having their weekend. Obviously, you guys are taking some time out of your Sundays to come and listen up to the stream, learn a little bit more about the charts. So yeah, good on you. But obviously, remember to have relaxing time as well. So no FOMO over the weekend. Hopefully, just actual relaxation. Do some other stuff, right? Life isn't just all about trading. We're trying to trade to escape, the normal lifestyle, right? To do whatever we want. But yeah, welcome back, everyone. We have 11 people here already. BitMeSum's here as well. That's great. We have 14. Jesus, just keeps jumping up. Yeah, welcome back. Welcome back. What did price do? FOMO buy. Let's have a look. I actually don't know what price did. It's been a while since I looked at price. Weekly close bullish. Don't really like the weekly closure actually. I am not liking this closure. On the daily, it's 4 hour kind of shows you a lot more. I'm liking the 4 hour. Yeah, I mean that's why I kind of want to switch it up a little bit more today, and it seems like it works better, right? We have 16 people here already, but usually we have to wait for like another 10-15 minutes before we even get up to like 7-8 people. So I might start streaming Sundays a little bit earlier if it works best for people. I know a lot of people are tuning in from like kind of the Asian side of the world, so it does restrict them a little bit in terms of time zones, but hopefully today it's alright. Yeah, 4 a.m. is a little bit antisocial, I do realize that, and apologies, but yeah, nothing I can do about the times. If Don was doing, I think, his typical Sunday things, then yeah, I think we may be intruding into that, but I don't think he's doing anything today, so should be good. FOMO buy. I don't think we would buy right now, to be honest. Just looking at the 4 hour and how it's closed, it looks like it's closed back into the range, so not much I can really do. Maybe looking for some sells off the rip, but again, price is so bullish at the moment in terms of just general price action and 2024 gold pushes. So we really need to do this analysis if we want to consider any sells, right? Sells, can happen, but we have to really think about why we're getting into those sells and what is the logic behind the sells. Exactly, right? There's no liquidity from above. How much liquidity do we need from above before we're able to take those sells to continue down? That's what I'm asking myself every time I look at the price, right? Every time I look at structure, every time I look at anything, always thinking to myself, okay, right, I could be looking for some sells here, right? Price action showing me there could be some sells here, but price is so bullish at the moment, right? And it's not really following too much price action, I would say, at the moment. So your buys, I would say, are safer. You have a slight bias towards buys at the moment. But at any given point, we can still get sells, right? Because we're scalpers. We don't hold this for a long time. We hold this for a max, right? We want to get in and out within like 15-30 minutes max. If we're trading any longer than that, we're typically in a bit of drawdown, or we're just wondering, okay, we're just looking for price to close like this, needs to grab liquidity before we're able to make that push. And sometimes it typically takes us a couple more hours, but the kind of analysis is key to understanding what's going to play out and what won't. But yeah, I mean, since there's so many people here, I'm just going to get started, really. I'm not looking to make this a very long stream. I appreciate a lot of you want to go to bed as soon as possible. So yeah, right. Welcome back, first of all. It's the 21st of April. It's been a while since we had a stream, because I think Thursday we had a stream, but last Sunday we didn't have a stream. So this is a Sunday psychology special, all right? But let's go straight to the market analysis first, and then we'll come to some questions later. Monthly, right? We always start with monthly. Monthly, I'm not even going to need to draw a line, right? Because our monthly hasn't closed. We had a previous no top wick and no bottom wick situation. There's not much we can do. Besides, right? Besides saying that, okay, we're extremely bullish, right? We closed above the overall range here, closed above this wick here at 2150. We closed above here, you know, like wherever these ranges are, and we're just clean pushing up, right? There's nothing showing that we're slowing down yet, just based off of the monthly candle. Obviously, on the small time frames, we're going to see some ranges, some resistances, and so on and so forth. But just on the monthly, nothing seems to be stopping the monthly, right? If anything, we could be looking for price to do this, right? As it's doing this, to continue bouncing back up. So if that is the case, we're looking for more buys. And where the buys above, on the monthly, it's going to be above 24.31, right? So that makes quite a lot of sense. Cool. Weekly is where we start to see a little bit of resistance, right? A little bit of, you know, what is price actually doing? Do we have enough liquidity to continue going up? Hey Eddie, what's up? So weekly, right? Weekly close, I would say within the previous weekly range, right? So the previous weekly range I'd identify as here, right? If we just extend that over, top, bottom of the previous week, right? So we're within that range. We haven't left. Any given point, price needs to grab more liquidity before we're able to go up, just based off of these two candles. And why do I say that, right? Number one, this weekly candle came up, had a massive top wick, right? But we didn't push. We didn't continue to push. We kind of rejected quite a lot, came back down, and now we're starting to fill the wick, but we didn't fill the entire wick, right? We're still trying to push up. So, you know, obviously I'm still bullish, but I'm considering how these candles are moving, right? How are these candles printing, and how are they matching up to, you know, next to each other? And that's what I'm really considering at the moment. So if you just look at these two candles, right, just in terms of market structure, probably you came up from here, came down up here, did something like this, now you're down, and do something like this, right? So if you want to say that you haven't, you know, changed structure yet, I'd probably say you're right. We haven't changed towards bear structure, obviously, but we also haven't seen a continuation of bullish structure, right? To see the continuation of bullish structure, we'll need to see a break of these highs. But what we can say is price is struggling a little bit, right? Because if it wanted to, it would have started pushing up after this bottom wick to continue retesting these highs and then making that new higher high. So there's a little bit of resistance going on. We can't identify completely just based off the small, the kind of weekly time frame, but just based off of these two candles on weekly, we can say there's a high chance that price will need to grab more liquidity, or that's something we're looking for. All right, so let's go towards the daily now. Daily's going to give us even more information, obviously. Dailies, let me just get rid of all this. Let's keep the weekly range for now. Let's keep the weekly range. But yes, so weekly obviously opened here, right? That's the bottom wick. Well, this is the open here and then bottom wick, top wick, and then somewhere in between we closed. So on the daily, we're going to see some smaller ranges, right? I'm going to say my daily range is going to be between here, right? So, are you about to head to the beach, Eddie? Jesus. Okay, yeah. Thanks for tuning in, but, you know, head to the beach first, bro. But yeah, so this is our daily range. I would say that last time we tapped in these areas and then we started coming back down, right? So we haven't really broken out of this range until Friday. Right? So Friday is the first time we actually closed above the range. But what do you see? Right? What I'm looking at here is a closure above the range, but not really any steep bottom wicks, right? You don't really have anything here, don't really have anything here. So I'm kind of worried, right? If price does really want to drive up, we'll probably expect to see a steeper bottom wick. And that bottom wick would just be a confirmation that price doesn't want to drive down, because obviously, even though we're extremely bullish, we can still come down for price, looking at these massive candles to the left, right? So if price wants to continue going up, I'd like to see something like this, you know, bottom wick breaking some of these lows, right? Maybe even breaking this low, and then a continuation back up, right? So that's what would be most ideal. Doesn't mean price has to print that, but just based off the daily candle, right? It's looking like there's also a bit of a rejection, right? So you've closed, I would say maybe on your smaller time frame, you have some ranges above here as well, right? Because you have some wicks. So you close back into this range. So you probably have some nice range to basically come down to fill towards this 23.85, right? So if that's the clean range that we're able to play, doesn't mean we're able to take the trades, obviously, because there's going to be market open and, you know, other forces essentially, because, you know, gold price could open up and it could be, you know, bullish push or a bearish kind of gap, right? But I would say that if price wants to go up, you probably need to tap at least down back to this 23.84 area first. After that, you can see price to continue go up, right? And you can, right? It's just like if you continue back up, nothing I can do because I'm looking for a bottom wick down at these areas. But if you then, after this top wick, come down, then you break this low, I'll look for some sells to come down to this area because then this would be the liquidity for me to come down plus a market structure shift, right? If I then want buys, what I'll need to see is probably this. If it breaks back above, comes back down, creates a steeper weekly daily bottom wick, and then reflips, I'll look to take the buys above here, right? So then the buys above this area are then clean, right? Because then you have up to this point as your advantage, and then your next advantage point up to here, 24.30. So we can play all of these ranges. It's just about what confirmations will I need to see before I'm able to take those trades. Yeah. So that's the daily. I'm not really liking the current bullish, market structure at the moment. Even though we did create a higher high, this higher high is still within this weekly, range here. So I'm a little bit cautious there, right? But let's have a look at the 4 hour. I mentioned at the very beginning of this stream that the 4 hour is something we're definitely looking at as probably the cleanest time frame that we could be looking to, trade on because the market structure is looking a little bit cleaner. The ranges are looking very much cleaner as well. So let's do that analysis as well, right? So let me just get rid of all of this, right? 4 hours is going to be a completely different beast. So let's put some lines in now, right? So I'm going to say you actually have a top of the range there. You have a bottom of the range approximately here, right? Very simple. I haven't overcomplicated anything, right? Very simple, 2 lines. Where does it make the most sense, right? Here in the past, we rejected. We pushed straight through, rejected here. So this is another point of interest. You started to respect this area, right? To come back down, grab liquidity before breaking back above. Here, above, top of the range, bottom of the range, top of the range. Same things, right? You've all heard it before. This is the 4 hour kind of levels that I'm looking at. Obviously, you have some smaller denominations in between, but we'll see this on the smaller time frame, maybe the hourly, 30-minute, and so on. 4 hour, what does it look like, right? It looks like the 4 hour probably rejected off of this point. If you do move this line down to around here, you could say you had a bit of a fake out here. You definitely had a fake out here, right? And you probably have, something going on around here. You are moving up, right? That's what I mean by price action being very, very icky at the moment in terms of sells, because even if you had this massive top wick, closure back into the range, you didn't fill the range down to here, right? So that's what I mean by price action, not definitely following price action all the time, especially at all-time highs, but any given point price, because now it's closing back within this range, you can probably see it to come down towards, well, you filled the range down, to be honest, right down to here. On your hourly range probably, but you have a 4 hour range that comes down towards this area here. Just gonna take this down towards around here. So that's your next kind of most logical level, I would say. Next kind of further down before that is kind of 23.73. So this kind of 50 pip range between it, but we'll see that on the hourly, right? Just based off the 4 hour at the moment, we'll see that every time we closed back below this range, looking at this, and looking at, obviously this candle, and then obviously these candles, every time we close back below, even this, right? Because we closed back below this range here. We filled down to around these areas, tapped into here. Here we tapped into here. Obviously, we filled all the way down here. This one rejected, came down to here, right? So expecting price to probably tap into this 23.78 level before it wants to go anywhere. You could also say price is, maybe on the 4 hour shifting towards a more bearish structure. Why? Because if you look at the kind of structure points, higher highs, higher lows, right? Came up, higher high here, higher lows, right? Came back down here. You broke some of these lows here, right? This massive 4 hour candle had a bottom wick, it came down, right? So here, came down. So this could be your first lower low. This could be a lower high. And then once you break this low, you could see nice traffic to come down to here. But what would that need, right? Well, for us to take trades, what am I going to need to see, right? If this is the market structure I'm looking for, let's drag this all the way to here. I'm going to need to see a top wick, and I'm going to need to see a closure, right? So a closure below this range, and then I'm going to need a top wick. So I'm asking myself, okay, where do I want this top wick? What am I looking for in this top wick, right? Just, you don't have to complicate it too much, right? Just look at what happened in previous installments of price action, right? looking at this looks like a pretty nice top wick. So if we're able to tap into these areas and then, you know, re-break some of these lows, look at this, top wick here, break this low, straight down to here. So if we're able to do that, long shot, but if it happens, we'll get into the trade and we'll look for this fill, all right, this range fill between this 2373 kind of area down to this 2360. So you have a lot of range to play, right? But that's the same thing as this, right? Top wick here, after this market structure shift, break these lows, still waiting for that top wick. So this top wick now is a little bit higher up around here, right? So, and this would confirm that price doesn't want to go up, right? Because if it does, it'll go up here, continue going up, and we'll look to take our buys above this range here. But that's what we're kind of looking for in terms of our sells. In terms of buys, right? On the 4 hour, it's looking a little bit difficult because I'm going to need that bottom wick. I'm going to need that daily bottom wick that kind of needs to exist kind of in this area below here. So maybe the sells will happen first. If the sells happen first and it comes down to here, I am not going to be holding trades past this level at 2360 because I'm expecting a daily bottom wick here, right? So if the daily bottom wick is going to be around this area, why am I holding past this area? Because that's a bottom wick for price to flip to continue pushing bullish. Just look how the weekly closed. Just look how the monthly is currently printing. We're extremely bullish. So holding sells for too long probably isn't in your favor, right? So I'll definitely be getting out of all sells around this kind of area at 2360. But after that, once we kind of tap into, I would say, you know, anything below this zone here, after that, probably then good for buys to continue back up, right? And that could be buys even above this range at 2378. Because every time we close back above this range, you look at this, look at this, look at this, you fill, right? You fill. So all we need is a bottom wick again. So if it respects this area, bottom wick, and then starts breaking back above here, we can look to take those buys. And let's just draw that out really quickly, right? So what we could see, right, potentially the price to do something like this, right? We have the top wick come down to here, but we've respected. And then we start reversing, right? If we have a bottom wick like this, coming back up, yeah, I'll look to take this. And depending on how this wick on this candle looks, this could be an off the rip trade, or this could be, you know, waiting for a bottom wick. So in this case, not too steep a bottom wick, probably look for this to continue going up, right? And look for this bottom wick somewhere around these areas, right? You see this? See maybe some of these areas here? So somewhere within this box here, I'll probably be looking for a bottom wick. If not, right, I'll look for this. If this bottom wick looks like this, then fantastic. I'll look to take this off the rip. Not holding all the way to here, but I can probably attempt some runners. But I'll probably, you know, close at least half at this area at 2388, which is 100 pips away. Obviously, you're not taking the trade right here, but you know, you've got some nice advantage points, I would say. So yeah, that's basically what I'm looking for in terms of buys and sells. And obviously, once you have this bottom wick, the buys above here, you're probably clean. But again, I'll need to see steeper bottom wicks because price after here, something that I've kind of picked up on as well is if you've been driving for quite a while, you could actually start respecting this range again because you've driven for such a long period of time, right? And also you've driven so far, you may need more liquidity for us to continue going up, right? And so what that may look like is price after tapping into this area, you could see a rejection. You could see a rejection, but rejection respecting this range here now, right? At this line here. If you start rejecting and respecting this, cool, that's completely fine. What I'll look for is re-break this high with the steep bottom wick and then a continuation to go up, right? And in this case, right, we have the liquidity, we have the direction here with the breakout, everything is good, right? And I'm not worried that, okay, prices just grabbed all this liquidity to fill the range. Do we have enough liquidity from here to continue pushing up, right? That's something I would worry about as well, right? Because looking in the past, you had liquidity from these areas, you didn't even break above here, right? And if you said this is your, you know, top of the range, you could say, oh yeah, we got a breakout above here, instant reversal. So that's what I'd probably be looking for. I need steeper bottom wicks. I'm going to need to see a breakout above, and I'll probably actually be looking for the flip or the re-break of the high. Just looking at this previous structure, we took this off the rip, instant drawdown, right? So just learn from what price action prints, right? If price action is showing you that you shouldn't be taking this off the rip, then don't. Wait for the re-break of this high and then continuation up, right? Pretty simple. So yeah, that's basically price action up to the 4 hour. Let's have a look briefly at the hourly. I would say the 4 hour is definitely one of the cleanest time frames at the moment that I can see. Hourly is not looking too bad as well. Hourly, again, there's a bit of a messy situation between this entire range here. It's not, ooh, wow, that's huge. A bit of a messy situation just between this massive range here, which is 240 pips. Massive range, right? But I'm just going to say it. I don't want to trade this range, right? Because we've been in this range for multiple times. We haven't really cleared the range until this, and it just came straight back down. And now we're kind of screwing around this area again. Don't know what goes on in this range until we come down to break above, or like either tap into this area or tap below this area here. I can't trade this range. I mean, even with this, I'd like it to tap down to this because I need that daily bottom wick, right? So until daily bottom wick happens or re-break the high happens, I can't take the sells to come back down, or I can't take the buys to go back up, right? If you remember in our previous, right, in our just now when we talked about the buys to fill this range up, right? Where was it? Let's try to find, yeah, this one, right here. So if we try to match this back up to the 4 hour. How did we draw this? Is it gonna align? Oh, it's not. Unfortunate. But this is the 4 hour, right? Let's just move this like this. So this is basically what I'm looking for, right? I mentioned this just now as well. If I want to look for the buys, I'm gonna need these bottom wicks, right? So these bottom wicks to come back down. So where I had that green line just now, just below here, right? Consistency, right? Same thing every time. The analysis doesn't matter which time frame you're on, right? It just matters how you're perceiving price with all the time frames combined. So if I want to see a tap into this bottom, kind of bottom wick area here, then a break back into this range, I'll need a bottom wick, right? Because this will confirm to me that price doesn't want to continue driving down. Because with this, probably pretty strong bearish price action to continue down. But first signs of reversal, potentially that price is respecting this area, re-break of this low, then a flip, closing bullish. Closing bullish is always good, right? If you want to continue going up, you probably want price to close bullish, right? After that, bottom wick continuation up. Even in this case, I probably won't be able to take any buys from here to here unless you have a massive bottom wick, right? Massive bottom wick saying like something down here. But if not, probably looking for a buy above here to fill this range, right? That's basically it. And then if we, I guess, move forward, is there anything else? No. But yeah, that's basically the 4 hour, and kind of translates over to the hourly, right? I move this down to here. Same thing, right? So if I want to trade this range, I'm going to need to tap into these areas or tap above these areas. So that's kind of what I need, because at the moment this range is a little bit not too sure about the range, right? But yeah, that's probably the higher time frame analysis. And why do we do the time frame higher time frame analysis first? Is because a lot of the times we'll look into like maybe the 30-minute or the 15-minute or even the 5-minute, sometimes even the 1 minute, right? I'll look at the 1 minute, but I'll look at that and maybe sometimes you'll be too zoomed in, right? You'll be looking at, oh, okay, the 5 is just printing this structure, but that's the 5 structure. Your 5 structure can change within 15 minutes because one bullish candle, one bearish candle, and another bearish candle will break your price action, right, on your 5-minute. So higher time frame price action is going to tell you more information and where price wants to go. And just based off the hourly, this range, right, every time you're kind of in this range here, a little bit disgusting, I'm not gonna lie, right? Unless you print something that looks like this, where you have bottom wicks, you have highs, you have lows, a continuation after re-break the highs and grabbing liquidity, maybe you can look to take this, but even this is top of the range, right? So it's a little bit difficult there. So yeah, wait for the kind of higher time frame plays to happen, especially because you have market open and price at the moment could gap up or could gap down, no idea, right? So after price kind of settles a little bit, maybe during Asian, you'll see price show you a little bit more direction on where it wants to go. But overall, I would say you're pretty good to continue coming down for a while, because looking at this, right, you have some bearish structure on your higher time frame coming down. This could just be a lower high. You're looking to, on the small time frame, 30, 15, you're breaking this low again, right? So maybe you had this bullish structure here on the 5, 15, your 30, which contributes to your 4 hour top wick or your 4 hour kind of top of the range here. And then now you're starting to flip to come back down. You're starting to see break of structures coming back down. Once you re-break this low, Maybe if you actually get a closure below somewhere like this, you should have clean traffic to come down to here because you have nice clean straight candles to come down. But again, just going back to that, right? If I just zoomed in all the way to the 15 and I've convinced you to take a sell below here, go back to the 4 hour. What does the 4 hour look like, right? And do you have enough justification to take the sell, right? I'm gonna need a re-break of this high first, at least, and then price to come down to these areas, right? And if we go back to the 15, that's gonna be a test of these highs, right? So if price wants to continue going up, it will, right? And it'll continue to break this high to continue filling up, right? But if you break the high and then you re-break the low, that would be considered a liquidity grab to continue down, and then you could probably look to take this range down here. Until that happens, I cannot take this sell, especially because you haven't even closed below, right? Once you do close below, then cool. Yeah, that's a completely different question, right? And you close below, yeah, I'll look to take this sell to continue down, but again, top wick is needed. And then if we look at the buys, right? If we're looking at the buys, oh yeah, cool. Can we take a buy after price closes above here? Buy is a little bit difficult, right? Because I'm looking for top bottom wicks all the way down to here. So, right, it's a little bit difficult there. But if price again shows me some bottom wicks and a continuation is to go up, all I need to do is go to the higher time frame, right? On your hourly. What do I need in terms of bottom wick? I'm seeing that every time you want to close above these areas to continue going up, right? Here you closed and you maybe grab some liquidity here, grab more liquidity here. In this case, you kind of just grab liquidity here once. So I'm not too sure. All right, so even if I want to take the continuation up, I'm going to need to see the re-break of certain lows, right? If it's going to be this low, then, then so be it. I can't take it, right? But I'll likely need to see some of those being broken around here. And if that means waiting and not getting into any buys, yeah, that's fine, right? That's just not my move for now. And the market cycles for the buys will come back maybe on Tuesday, maybe on Wednesday, and so on. But at the moment, probably slightly more difficult, right? And then if you zoom back in, right, you'll just see that if I get, where was it? On the hourly, it was here, right? So at this 23.82 area. So if I go back to the 15, 23.82, if price action is going to do this, right? Let's say, oh wow, cool, I've got a bottom wick down to this 23.82 area. Does that mean I'm able to take my buys? I'm not too sure, right? Because last time you tapped into these areas, or not even this area, just generally in this kind of level here, you didn't really go anywhere. You tapped this top of the range, but you weren't able to break out, right? So taking this buy here is a little bit dangerous, right? What you could look for is potentially a bottom wick like this, a closure above this area, and then maybe another continuation after a bottom wick. So again, it's all about confirmations, right? If you see something like this, maybe you can look to take this if you have another steeper bottom wick like this, right? And then you can look to take between maybe this range here, break these highs towards this next resistance point. But again, I'm going to be a little bit careful here because price action on the 4 is a little bit scary, right? So if we just go back to this 23.82, identify on your 4 hour, it's just here, right? It's just here. 82 is around here, right? So that's if we just identified our 4 hour top of the range is around here, bottom of the range is anywhere between this 23.76 and 23.73. Any given point, you just come back down, fill the entire range on your 4. So taking a buy once you re-break this and it's just doing this could be liquidity for us to come down. So hopefully that makes sense to everybody. I think this analysis was relatively in depth. I've kind of done a little bit more detailed one because we have quite a few people here on Sunday. So yeah, hopefully that helps. Let's see what some of the boys have to say in terms of questions or how their trading has been. But yeah, Reese, Jacob, how are you guys doing?
Yo, what's up, guys?
Sup. Good weekend?
Yeah, bro. How about you?
Yeah, not bad. It's for some reason just again extremely cold in the UK. It is nearly May. How is it so cold?
Hmm.
But yeah, it's just weather issues. Typical weather issues. Yeah, feel free to sleep, man. I mean, Aditya, if you're basically you're in Asia, right? Because if it's like 4 a.m. for you when it's like 10 p.m. for me, then you should wake up for Asian session, or at least you'll be able to trade London, right? So I'd imagine your Asian may be a little bit weird because you have market open on Monday, obviously, but yeah, London should be okay. Hopefully, we get some continuation down for. Yeah, now it's 12. Perfect, right? Now you can sleep. You've got work tomorrow. Works out really well. Yeah. Damn, we have so many. Jacob, how does this time work for you in on a Sunday?
It's not bad. What, 1:30?
It's not bad. Okay, okay.
Yeah. 7:30 for you, you said, right?
Yeah, 7:30. I mean, I can't really do this time every single Sunday, but I mean, I literally logged on. I started the stream, and like 15 people just came, which was nuts. Yeah, take screenshots. Rewatch this as much as you want. Um, I mean, again, also you should find me anywhere. Like if it's Signals chat or if it's and just general chat on the DVS Discord. Plug for the DVS Discord, obviously. But yeah, just feel free to just reach out anywhere and ask me questions. Right, even on the Instagram, if you have a chart or whatever it is, just send it across. Once I have time, I'll definitely answer. Right, but time is just the issue. Eddie, it's nearly 3 for you. Jesus. Please get some
3
sleep.
p.m. in the afternoon.
Okay.
In terms
15.
of psychology,
Yeah.
I feel like for this past month, I've had, I would say, like, I've had a bad month because I have trades that, like I've been taking trades and not journaling them. So when I take a loss, I kind of just go to the next trade.
Yeah.
It's kind of just been a bad month since, like, so I took like a decent loss, like on FOMC, the last FOMC on the 20th
Mm-hmm.
March. So like literally a month. And I was just thinking about it, like I just need to stop taking trades and just like trying to just take trades to make money because that's what it is. At
Mm.
the end of the day, when I take those trades, it's just like me trying to make money, and then I go to the next trade. And whether I made money or lost money, I don't care about the previous trade because I'm not trading to trade. I'm trading to make money.
Yeah.
So yeah, I just
I
need to
think
stop.
a good way to potentially, I mean, I've been thinking about this quite a lot and like thinking about how people can, deal with FOMO slightly more effectively as well. You know how basically if you have an account and you're trading that account, live account, funded account, whatever it is, if it's real money, you'll want to make money, right? So obviously we want to get experience with a live account because eventually we're all going to be trading a live account. But in terms of fixing FOMO, there is a world where you potentially just open up a demo because you can't make money from a demo, right? And you just basically trade each trade as it is. Doesn't matter if it's a win or a loss, obviously, because it's basically it's just what is it? A demo account,
Make
right? It's just a demo account. It's fake money, right? So just journal each one of your trades with that account, or with multiple demo accounts, and then just record that and try to make each, like, don't try to double the demo account or whatever, right? Just try to make each trade of very high quality. So you know how we did the analysis just now, right? Like, one thing you could do is literally just trade the 4 hour time frame. And if you don't see a 4 hour move, don't trade it, right? Something like that, for example, right? Or you could do, trying to limit yourself to like 1 to 2 trades a day, the classic stuff. But, with that, you're not trying to make a lot of money. And in that sense, you'll try to fix the FOMO. And obviously there's a bit of a gap between that and then going back to your live as well. But I think a lot of the times we're looking at, our live accounts, or we're looking at money or the kind of number go up and down, and just associating that to, oh wow, yeah, that's the money I use to pay for my bills, my food, everything, right? So it's something that I've done for a while. I'm going to continue doing as well. But yeah,
so just completely trade on a demo.
I think if you're able to trade a live and a demo, right?
Mhm.
But with your live, obviously be more careful. With your demo, try to treat them as kind of like the same account, and just trade like the very, very high quality setups, I would say. if you have any doubt about the trade idea, use the demo account, right?
Mm-hmm.
If you've seen that trade a million times and you're like, yeah, like there's no way this isn't going up, right? In your gut, it's like, you know this trade in and out. Like it's like a breakout above. You have a 4 hour closure, hourly closure. You have liquidity. Daily is completely like your daily no top wick, and you've grabbed massive bottom wicks, and like your weekly is about to flip, your daily is about to flip, everything's about to flip, right? And you're extremely
Yeah.
bullish, bro. I'm taking that on my live, right? Exactly, right? So, but if you have like any doubts, like, oh, maybe the 4 hour, like for example, this, right? If I was to take a buy above here, even if I have bottom wicks down at this area, I'm kind of like, not too sure, right? So maybe take that on your demo and just see how that plays out. And then try to record all that on your demo. And don't try to over trade as in like, because once you take a loss on your live, you'll think about, oh, I might need to, take another trade or whatever, or you'll look for more trades. But on a demo, it literally doesn't matter.
I think too, it would be a good idea because like you could just have an account where, say you have a rule where you're like, okay, I'm gonna take 2 trades a day or 1 trade a day, or if I take one win, like I'm done for the day.
Yeah.
But like I still have, like, if I'm not lying to myself, I still don't have like the full discipline to be like, okay, I'm done for the day, and then not take it on my live account. So maybe I would have the live account and then, like you said, have the demo, and then if I feel like that, take it on the demo.
Yeah. Yeah, because I think there's the issue is like, I mean, I've found this myself as well, like, because I've been trading multiple live accounts, right? But the issue is, once you say you're done for the day on your like your main live account, and then you're trading like say you're like a 0.01 on your other account, then that account suddenly becomes like your FOMO trades. Right? It's like,
Mm-hmm.
well, I don't want to be FOMOing even with the 0.01. Like, obviously, the account's smaller and whatever, and I'm losing less capital. But at the same time, I just want to trade, I take high quality trades. So if you're able to record all of this in a journal with high quality trades, less trade frequency, higher trade quality, then yeah, right. Then once you're able to do that as well, then in your journal, technically, you'll be able to see these results through higher percentages in your win rates, right? And then as that's happening, what I want to get to, right, eventually, with the DVS kind of the app and everything going forward, is potentially to have something which, like, before you enter a position, prices like, okay, so what is the setup and entry you're looking for, what time frames are currently aligned, and as that's going on, you have like a meter on the top, like a percentage thing that just tells you
Yeah.
what this trade percentage looks like based off of your journal, right? And then it's just like, okay, yeah, if it's above 80, I'm taking it. If it's not, cool, waiting, right? And it's just so mechanical, right? But it's based off of your own data. If that's possible, then I think that would be the most ideal way for us to trade. I think Reese had a question in the chat. Good question. So you can't talk right now, but how would you qualify a high quality trade setup? So a high quality trade setup is essentially everything that I've been saying, right? Like, so the analysis that I've just done on the charts. Essentially, I'm waiting for the higher time frame to line up with the smaller time frames as well, right? So what I mean by that is, for example, this 4 hour closing back into this range. So suddenly I'm like, okay, well, we just go back from the top, right? Weekly, we close bullish. Daily, we close bullish, but we have no bottom wick. So I'm a little bit icky about that, right? 4 hour, I'm suddenly closing bearish back into the range. So I'm thinking probably the 4 needs to come down further to either create a bottom wick for your daily, for your weekly, or it needs to come down because it just wants to, and that's the market structure shift at the moment. So I'm a little bit more bearish than I am bullish at the moment, but I need the confirmations, right? So that's where the quality kicks in, because with each extra confirmation, the quality of the trade improves. So for example, if I'm taking this off the rip, right, what is the percentage win rate of that? Probably slightly lower, right? Because I don't know if price is going to continue back up or if it's going to come down. So I would say maybe it's like let's say a 60-40, right? Let's just put it there, right? Cool. So if that's 60-40, then suddenly the quality of that trade is reflected in the kind of ratio there. So 6-4, right? If I suddenly get a top wick and then a flip of the candle, right? And I'm taking it here. Cool. Suddenly the kind of trade probability of of it playing out is probably maybe 75-25, right? 75-25, fantastic, right? So suddenly the quality's gone up a little bit more, and I have one extra confirmation, right? More confirmations I could be looking for is, you know, a top wick breaking these highs, or, you know, a top wick breaking these highs and then a re-break of the previous 4-hour lows. These are all different confirmations that as you continue to stack up, the trade quality just improves, right? Because, you know, we're obviously looking for this in terms of, you know, like market structure, break of previous lows, break of previous highs, liquidity and all of that. So the top wick above here would be liquidity. That's what we would classify as liquidity. The re-break of this low would be a market structure continuation to come down, right? So all of these things, as you stack them up, the quality goes high. Obviously, I don't think you'll ever get to 100% quality, but for us, right, what the most ideal confirmation, right, if we just go to the extremes, and this hopefully will make sense for everybody, is imagine, right, just imagine price does this, right, comes up all the way to here on that, like a gap or whatever. Let's make this bullish. Let's say price just opens up and it's like this, no bottom wick, right? That's your weekly open, that's your daily open, right? All of a sudden, price starts flipping or it starts rejecting, right? And then you end up in a situation where price is currently like this, but you have a massive top wick that goes all the way up to here. So what are the odds that price is going to continue down, right? So the highest quality setup there has been achieved because you've broken this high, you've broken all-time highs, you've come back into this range, your 4 hours closed bearish, back into the range. You probably at least, right, the best range you can take, right, is between here and here. So between this candle and between here, this line, 75 pips. All right, that's it. That is the highest quality range that you can trade, right? Because you have a massive top wick for liquidity, you have direction because your price is flipping, your daily, weekly, nothing has a bottom wick, 4 hour closing back into the range, all of those things happen, right? And then you start to take away small bits of that, right? You potentially not as steep of a top wick, or you didn't really break certain highs, you're waiting for, you know, and then you're compensating with a couple other confirmations as well. Hello, Huss is here. Sup. How would you decipher when to take a position through a stop or limit order or a market okay, so like a buy stop, sell stop, or like a market execution. So for example, right, I mean technically those two are kind of it's just when you want to execute the order, right? The reason we want to use a buy stop is, for example, I'm looking to take a buy there regardless of what happens, right? For example, this candle just came up all the way to here. I am looking for a flip of this candle. But when it's all the way up here, am I looking for a sell stop? Probably not, right? Because it's so far away and I'm not expecting it to flip to come down. But if it does, yeah, cool, I can look to take it down. So, you know, having a sell stop here is probably pretty solid, right? If we're pretty bearish to come down at least. When I would look to take a market execution, it's probably on wick entries. So for example, let's say price does this, right? Let's redraw this, right? Price, let's say, comes down to this, or let's say we have a breakout below this area, right? Then we have a top wick that comes all the way up to here. All right, let's say we have this. All right, this is a really nice top wick. Obviously, we're breaking back into this range. We have some range down to fill at least towards here, right? At least. So if I want a wick entry, because I'm very certain that price wants to come down because you've broken this high, then you've rebroken this low, I'm looking for a daily bottom wick down at this area, right? So I'm pretty sure price is going to come down. That's like my mindset at the moment. So if I'm looking for a wick entry, I can't really sell limit anything unless I'm looking for like a level to get tapped or whatever. But what I'd probably look for is a market execution, you know, somewhere in these areas for price to continue down, because I'm expecting price to do something like this, right? And what is a better entry than the flip? A wick entry. If I'm able to get in here, I have a better advantage point on the flip, and I have a better stop, right? I have a better stop up here. So that's probably when I would use a market execution. And using a sell limit is going to be a little bit difficult there. The other option is you could take a sell stop below here, right? Obviously on the flip, that works as well, because then you're expecting, you know, at least a wick fill to come down. But a wick entry here, I definitely have to use a market execution. The only way I would use a sell limit right, is if I probably zoom into the smaller time frame, and then I'm looking at like, oh, okay, every time we close below here, what was this top wick? Maybe I'm looking for this top wick here, or like some top wicks within these other areas here. Then it's like, okay, cool. I'll look for a sell limit and I'll place that there. But I would say that's relatively rare. Does that make more sense, Reese? I would say essentially a sell stop, buy stop, or market execution is the same thing. Sometimes when there's a lot of volume as well, it's difficult to do a market execution at the exact area that price wants to, where you want to take the trade, right? So for example, I want the flip here, but there's so much volume that I don't think I'm going to be able to take that trade. So I'm just like, okay, I'll put a sell stop there. And if price gets to that area, then yeah, cool. It'll do it automatically for me, right? And it'll do the next best price for the trade. But if, for example, price is moving like 30 pips every 1 minute candle, I can't market execute that, because I'm gonna be market executing. Maybe I'm like 30 pips below where I want to be, right? So yeah, I think that's basically it. Market execution. I mean, it's just a way to get into the trade, but that's basically it. Yeah, good questions though. Welcome back as well. Glad to see you're back here for the rest of April. Any other questions?
Oh, I was gonna say, how I said like when I take trades sometimes and like I don't journal them, right?
Mm-hmm.
Like how I said it took me a month, like that also needs to like not take a month. Like it needs to take me like a day or 2 days and be like, yo, what am I doing? Like I can't do that because it's just longer. I'm going.
As in, like, you're
Like
journaling your trades after a month.
no. Like just saying like how I said like I had a bad month, right? Like I'm
Yeah.
just feel like I had a bad month. It needs to not be like that. Like if I'm having a bad trading, I need to like check it within the week. That's why I feel like it would be a good idea, like even just go through my week every week and like I feel like I don't do that enough. And
I
like
would
actually
say, yeah.
I think a lot of people don't know the trades that, or I feel like maybe that's what unprofitable traders do a lot. Like they don't really know the trades they're taking. Like yes, you could say I know that trade, like, but it's like so that you can journal it every and like not miss a single detail.
Yeah, I would say one thing that definitely I can imagine is kind of making it more difficult for people to become profitable is they overcomplicate a lot of stuff. So we're looking for breakouts, we're looking for fake outs, we're looking for very basic things. Like we just want certain colors on the charts, and these certain colors to be closures below or above levels. That's basically it. We draw a line, we draw two boxes, and that's about it, right? So why complicate? If you start to complicate things and you're like, okay, yeah, I want this closure above here, but then I also want this bottom wick into these areas. Oh, but then I'm expecting this to come up to here, so I can probably look to take a very small part of that range to come down before it starts to retrace. It's just so complex, right? And with all of that complexity, I'm not saying it doesn't work, right? You can definitely still trade that, but then you need so many more dimensions of results and data to understand what is actually going on in that section. So let me give you an example, right? So you know how I said this kind of 1 hour zone here, I don't really like this entire zone. Why? Because if like even just this, what the fuck is this? Right? Let's go down to your 5 and whatever, right? Like here. Let's just zoom in to this. Like here. I can't take any trades here. Because price is going up, is going down. Oh yeah, cool. Is it going to continue down because this was bearish motion and come down? Oh yeah, let me take a sell off of the break, re-break this low. Oh, you didn't go break even? Cool. You come coming back up. Oh yeah, I'm expecting price to go up now, and then you hit your stop loss or whatever. There's so many bits to that. And on your 1 hour, all I said was you're just in this range, and I don't like this range. It's not clear to me. So break price down into literally the smallest and most simplest components that you can understand well, and just trade that. And like I think also your point on like reviewing trades every week, every month, it depends, right? If you're able to see a certain setup play out every single day or multiple times a day, and you're taking them, and like you have like 12, 13 different data points by the end of the week, then yeah, cool, right? Then maybe you can do a bit of a review of them. But I would say if you're taking new trades, right, and new setups, new entries, whatever, you can't really evaluate them until like a couple months in at least. And if you're taking old trades, then yeah, you can probably look to evaluate them. But if you have like say 2 years of data on breakouts, you're not going to suddenly change your entire breakout strategy based off of 1 or 2 weeks of really bad results, right? Price action could have just been a little bit hard to read for that week, or those 2 weeks, and there's just nothing you can do. Doesn't mean anything needs massive changing, right? If you're changing your entire strategy after like 1 or 2 losses, then obviously you don't have enough confidence in the strategy. So I would say keep it simple is the key thing. Just trade what you definitely know will happen, right? And that definitely isn't 100%, right? Obviously it's like maybe 80, 90% or whatever in terms of your confidence. But once you journal that in, it'll just get reflected in your journal, right? It's like, oh, okay, I see this trade. Oh yeah, I've seen this so many times. I'm just gonna take it. Take it, even if it doesn't work. Fine, that's fine, right? It's completely fine, right? Just journal it, and then the results will tell you everything. Have I started to
Yeah.
personalize my own playbook from Don's playbook? Reese, I don't know if you've seen. So from the previous playbook, well, I basically designed a new playbook for Don. Well, not new anymore. It's been quite a while, like half a year or whatever. But that's the playbook I personalized. I said, I guess.
You put on the website?
It's not on the. Is it on the website? The TBJ?
The spreadsheet.
Yeah, I mean, basically, it's just the journal that I developed, and then, well, basically, it's just a DVS journal now. So,
Oh, I thought you was talking about like more of a playbook because I
oh no,
think
no,
that
sorry, no,
the
yeah, that is. I mean, that is the question. I am wrong.
it's the same. They're kind of the same thing, same difference. There's not the same thing, but
Yeah, I mean, playbook wise, no, I wouldn't say. There are certain things that I added into the kind of spreadsheet, the kind of journal, as like different setups and entries. So, for example, I'll take like pre-motion or motion as like two extra setups. But I would say, in a sense, they're kind of a combination of some like fake out liquidity and bits and pieces of those. So I wouldn't say I really deviated. The overall idea of price action to me is still very similar to how Don trades. So not much difference there. And I don't think I will really have anything in terms of like my own playbook, because I don't think there's a real need until I get into like my maybe fourth, fifth year, and then I actually have like a very solid experience of price is gonna move in this way after this happens, right? I need to see it enough times for me to kind of not have to second guess myself all the time. Yeah. His daily leg candle. Oh yeah, he loves his leg candles. I don't know. I mean, yeah, that's what I mean, right? It doesn't have to be a leg candle or whatever. It's just reading price action. You just have a look at these lines, right? Just these lines on the charts. Some are red, some are green. This line has no bottom line, bro. This bottom line is not very steep, bro. I want a steeper bottom line. That's basically it. That's basically it. Like, I'm not gonna lie. If you want to drive, yeah, cool. But like, this looks like a rejection, right? Just again, 4 hour. 4 hours, very nice. 4 hours showing you that you have a closure back into the range, respecting this top level at 2400. No top wick previous candle. Many times that we've seen this, right? Look at this. Not much of a top wick, just come back down, right? All of this, just signs of rejections to come down. And in that case, I'm looking to probably look to take some sells, but again, certain things need to happen first.
I have a psychology like a
Go for
thing
it.
I was thinking. So when like news or like war events happen over the weekend,
Mm-hmm.
and then people come back on Monday and then they think there's gonna be like a certain move.
Yeah.
I think that's like a certain level of like FOMO too, like because you shouldn't base your trading off that, right? Because I feel like the market's never. Because I feel like I've seen like you never know when price is just gonna slow down or when it's. I guess I guess you know what I mean. What I'm trying to say.
So yeah, so basically you're trying to say like after a massive news event, like price, should there should be more
Should
of a
do
bias
something, right?
essentially on price.
Yeah.
Yeah, I mean, it depends.
But then
It
you
depends.
shouldn't think. Obviously, you can think that, but I guess you shouldn't let it affect your trading.
Yeah, I would say the only thing is like, for example, price is just pushing up. right? Price is just extremely bullish, just pumping up, right? There's
Yeah.
probably not much you can do in terms of like, yeah, I want liquidity, I want a breakout above certain levels, especially at like all-time highs. Like once we broke this level, you started pumping, right? And there's not much you can do there. But right, if you want to really stick to your price action, then yeah, you wait for some resistance to be formed and maybe a continuation to go up, right? But with those, I would say with the bullish side of things, price, relatively bullish, more bullish than bearish at the moment in terms of a bias, right? But yeah, in that sense, I would say buys are probably okay. And like if news decides to push us bullish, and jumping on the wave once it does start re-breaking certain highs or lows is probably okay. Like for example, if the weekly opens no bottom wick, obviously I don't think I'll take anything in between this entire range here. Until you start re-breaking this high, and then maybe I'll look for probably something that looks like this, where you have like a closure above, you have a top wick as well, like something like that, and then a re-break after a bottom wick, then I'll look for this, right? But if it just continues to push and there's no bottom wick and it does this, right, then again there's probably not much I can do besides just watch price. Because if I have this bottom wick, right, I have at least like an advantage level, right? If I don't, and I'm taking a re-break this high, where am I holding this until? Right? So I think in that sense, you can probably jump on the wave when news events kind of come out bullish, but if it's bearish, I'm more inclined to think like, okay, yeah, if it's bearish, how much liquidity do I need to continue going down? Or is this a liquidity grab for us to continue going up? Just because of kind of how price is moving at the moment with it, just ridiculously bullish. Does that kind of help? Hopefully.
Yeah.
Yeah.
But I mean, yeah, everything makes sense. I guess I just more like, yeah, sometimes because I feel like I'm not experienced, or I don't even want to say that, but it's just sometimes I let it affect my trading in terms of just psychology. Certain things that shouldn't, because I feel like you shouldn't trade. You should trade your setup, not anything else.
Yeah. I mean, with price just printing like extremely, like we have to adapt in some ways, and like part of that is just jumping on the wave, but at the same time as well, like try to stick to price action as much as you can where it's applicable, right? So use price action when price action is printing, and then jump on the wave when price action is just pumping, right?
And I think it's key for me to like actually bring up my trades more on Zoom, like because I feel like it keeps me accountable. Like, because yes, I can keep myself accountable, but then like sometimes I feel like, man, it's just way better to be like, yo, bro, I took this trade. Like, doesn't and then like when I talk to you about it, and then you're like, brother, like you missed this or missed that, like you point out things. I feel like
Yeah, I
definitely
mean, just
helps.
being able to zoom out a little bit more and then think. I mean, other perspectives definitely help as well. So yeah, definitely is a good thing. Reese, can you explain the pre-motion you were talking about? So basically for me, pre-motion is like, before price wants to, it's basically a liquidity grab, and I want to trade the liquidity grab, right? And what that means is on the higher time frame, for example, right, I'm expecting price to continue pushing up, but I need a bottom wick, right? So maybe what I'd look for is that bottom wick as my range to trade. So for example, I might be looking for a sell, between here, but there are conditions, right? And the conditions are, if price does break below, for example, like this area here, then I need that top wick, right? Again, to do this, to continue down. And I would classify this as more of a pre-motion trade than a breakout to come down, because in this sense, your 4 hours still kind of within this oval zone, right? That's what I would say. But
So
yeah,
did you say pre-motion is like what you consider
basically, yeah,
liquidity?
the pre-motion is basically I'm trading the liquidity grab. Because
Makes sense.
the liquidity grab on the 4 hour or like on the hourly or whatever is like a continuation of bearish structure or bullish structure on the 515, right? So there is still something you can trade there. It just depends what cycle it is. Obviously, it's I would say it's one level of granularity down, so it's a little bit more detailed, and you need to see more stuff happen. So it's a little bit more complex in that sense. Um, so it's I wouldn't say it's easy, and I haven't like actually completely nailed it. I'm still testing it in that sense, but yeah, like I think the liquidity grab is also something that could be traded. Like because if we're understanding that price, if it wants to go up, it needs to grab liquidity. Then yeah, like there's probably if it needs to tap into at least this area, then I can there's range here that can be taken, right? But at the same time, at the moment, price is just extremely bullish. Price action isn't always following price action, so in that sense, I haven't really been taking many pre-motions recently because any given point, price could just do this, right? Come all the way down to here, come up, right? And then flip, and then just continue going back up. Like I've seen that so many times recently, where it just does this, comes down, creates a bottom wick, and then just goes straight back up. And then I end up with a candle that looks like this. And it's like, well, okay, cool, nothing I can do about that. And that's just price action being, at all-time highs and being more volatile to continue pushing up. But if it does ever come back down to, I can't even imagine price being all the way below 2,000 anymore. But we were once down there. So if price ever comes down to back to this area, maybe we'll trade that. We'll trade some more pre-motion stuff. But we're
Bro,
so far away.
it's crazy how I feel like we all thought gold was like probably expensive a few years ago, and
Yeah,
now
man.
we're gonna look back and be like, bro, we should have bought gold.
Yeah, like I mean, just here, right? Like after this, we're like, oh yeah, massive liquidity to come down, and it just came down to here. And then after that, we started pumping straight back up. So yeah, I mean,
Do you
yes.
do you ever what do you ever question like how they can? Is it like how do they just? I'm pretty sure I need to do my research, but how it's funny how they can just stop trading over the weekends, like just choose when they cut off the markets or turn them. The like crypto trades. I guess it makes sense that crypto trades all 7 days of the week because it's not. I honestly don't know, brother. I do not
I
know.
think so. So with these foreign exchange or like commodities or whatever, you have to have like places open to actually submit trades, and like there's like opening times and closing times. Whereas crypto is just
Mhm.
like a platform where anybody can trade at any given point. So you just have lower volume potentially on the weekend, but you can still trade it. Like
Mm.
there's no governing body which says like, oh yeah, you're only allowed to trade this between these hours, right? Whereas for this, you need people to actually submit orders at certain locations, and like it has to
So
be online and whatever. But still,
does that have to do with crypto being like crypto, like just because it's not like, or is it because there's no regulation or
I mean, I think a bit of both really. Like crypto being extremely just digital,
Mhm.
and it
like
not really,
decentralized, like
yeah,
what is supposed?
decentralized, and then also because I think there's like maybe in the future when they try to govern it a little bit more, they'll try to implement something similar, right? But until then,
Mhm.
like anything goes really.
Yeah,
We had a
crypto is crazy, bro.
I had a question from the chat. Do you hold trades after profits not reaching your target, then then draw down, or you close like down at 2030? Sometimes market go against you, sometimes not. It depends on the situation. So, for example, right, if I'm expecting price to continue going down, but it needs that one extra bit of liquidity, I will wait, right? I'll wait, and like I won't close at like 2030 because that's not what I'm looking for most of the time. Like I'm not looking just to take 20 or 30 pips, right? Because maybe I'm trading the 4 hour range, and the 4 hour range could be like 150 pips, right? And if if I'm only taking 10 pips there, I could be missing out on quite a lot of stuff. But at the same time, if price starts going back into drawdown, and then you see like a market structure shift, right? Then what I'll be looking for in my head is like, okay, yeah, I'm expecting price probably to reverse now, but it needs to grab liquidity. So I'm gonna look for the liquidity grab, probably get out on the liquidity grab, right? Because price structure has already changed. After that, if price then goes back up, then cool. And if I've only made like 5 pips, 6 pips, doesn't matter, right? Because that was a liquidity grab. Or even if I've lost 5 pips or 6 pips, it doesn't matter because I'm understanding that market structure has changed, right? And if market structure has changed, the chance of me holding that trade and waiting for it to come back into profit before it hitting my stop loss is low. So that's basically the logic behind that. Just again, waiting for candles to close and watching to see where they closed. That's the key thing. Cool. Right, it's been an hour already. Jesus, that was quick. Right, any last things? If not, I'm probably gonna grab some dinner.
I think this time is actually cool for Sundays at least. Like it's a good time.
Yeah, I wanna do more this time.
Or if it works for Tom and Johnny, because they're not here.
I think Tom mentioned he's at work till 8:30, so he can't join. But we'll kind of mix it up because we have the members on Sunday, so on Monday as well, right? So we can probably do like an earlier Sunday and then like a later Monday. So kind of a bit of both.
Yeah.
But yeah. Cool. Zoom, I will see you guys on Monday. Thanks for joining up.
Tomorrow.
Reese, welcome back.
Wait, is that
Safe
tomorrow?
travels home. Yeah, I'll see you tomorrow, Jacob. But yeah. Cheers, guys.
All right, bro.
Peace out. Have a good rest of your weekend, man.
Or is it Reese? Well, how do you pronounce his name?
Reese, yeah, it's Reese.
All right. Peace, Reese. Peace, Elvis. Be safe.
Yes, yeah. And then for the YouTube, my Zoom has crashed. But yeah, for the YouTube, thanks for joining up, guys. A little bit earlier on a Sunday this time, but feels like it works for most people, really. So hopefully we'll be bringing this back for next week, maybe. If so, then I'll let you guys know, and I'll probably just start the stream at like 7:30 or whatever, if it works for me, right? If not, then maybe usual time. But thanks for joining up, everybody. Good questions today. I know it was a bit of a earlier one, so maybe caught a couple people off guard, but yeah, I will speak to you all on Thursday. And if you want to join members only, obviously we have the members on Monday every single week, and you can just ask me questions. We have these one-to-ones. I've done them with multiple people as well, so if you want that, just join the members, and you can just DM me on Instagram to see how that works. But yeah, thanks for joining up, and I'll see you guys on Thursday. Have a good rest of your weekend, and peace.